In this video, I'm going to be showing you how I made over $1,000 using the simple ICT strategy. So guys, if you find this video helpful, please drop a like and subscribe to the channel. Without wasting any more time, let's dive right in. First things first, guys, you need to get the overall trend of the entity that you are trading. In this case, we're going to be looking at gold on the daily time frame. So as you can see here, guys, gold has been bullish for quite some time, and what happens when we get around this area, we see we have this high creating a low, and later this low is broken out by this big candle. Normally when we have a high and a higher high and a break below, this now becomes the breaker block according to ICT. So when we have a breaker block, price is likely to react off this level. Now we have a fair value gap on the daily. This is now our fair value gap. So guys, when there's a break of structure, I prefer to see this candle closing below this level. It doesn't have to. If it closes here, I wouldn't have considered that a break of structure. That's from my own experience with the market. I want to see it close below with the big candle like this one here. Now that we have the fair value gap, guys, this is where you're gonna be taking your trades. Should price tap into this area here, you're gonna enter your trade depending on what time frame you want to use for your entries. So if you enter here, your stop loss is gonna be above the candle that breaks structure here. So in this case, this candle came here and closed at the same level as the previous candle here, and so there was no entry here. So what you do, price continue. So what happened? Price continued to go down and came back. Now this is where you could have entered or entered here. Again, price continued to go down and came back again. Now, as you can see here, price balanced this gap. Now the gap is fully closed. This is a balanced price. This is a balanced price. Here you see there's still a gap here, and now this one closes the gap, and price started to break below. Always wait to see if this candle closes below the break. Now for me, I did not take these two trades. This would have been some good entries here with your stop loss above here. So what I did, I watched the price going down, and then I noticed this week here there's a ton of liquidity resting here. So I waited for the market to make a pullback into this area. So when price came back into this area, I went to my lower time frame. Let me do this so that it makes sense. Now you can see that the market wicked. So as soon as price came into this area, I went to my 30-minute time frame. On the 30-minute time frame, you can see that this candle, this is the buy side liquidity that I marked on the daily, and now it's getting swept here. So I waited to see my confirmations. So the price started to go down. There's no break of structure all the way until we get here. Now whatever is happening on the high time frame is happening on the lower time frame. So you can see that there's this structure here getting broken out. You see the candle is still closing below, forming our fair value gap here. And again, we have this candle, the green one, as our order block. Another confirmation that this level is very important. So if you entered on the 30-minute, your stop loss is again on the candle on this green candle. Now this is what it would look like. Something like this, and your stop loss above here, and your next exit area would be here, this first low, and then the next low is here. You can choose this one. I would have chosen this one, or you go with this one. This is a big move. I hope it makes sense, guys. Now that we have our break of structure here and our fair value gap coupled with the order block. Still no trade on this small on this candle. Now what I did was I probably entered here. I've forgotten where I entered, but I think it's on this candle. So I opened 2 trades and the market continued pushing further, but I would have been safe. I'm still safe because now my stop is here. Some people would have been terrified and closed their trades, but they would have lost money for nothing. Or one thing that I would like to do is to mark with this tool here the 50%. You see, normally I mark it like this, then I will enter as soon as it crosses above the 50% of this. This is now the discount area. But I entered too early and I was swimming in a loss for quite some time here. And then the market started to break below. Here you can see now, here again, we have another break of structure here. You can see that this candle closes below. Fair value gap for me, your entry is this one. This would have been your second entry from this one. So guys, I'm not saying it's easy to trade, but the more you practice, the more you trade, the more time you spend on your chart, the easier it is to see these things happening in time. So this will be your second break of structure here, and this is the first one. I hope this video helps you guys, and please follow and drop the like button. Subscribe to the channel, guys. I'm starting to make more and more of these videos. If you can get me to like 1,000 subscribers, I'll be very grateful. Thanks guys, I'm out.